Is the US dollar in danger? We'll take a close look at this chart right here. Since the beginning of this year, the DXY has dropped around 10%. But what exactly is the dollar index and why should you care? Well, in the next few minutes, we're going to take a look at exactly what the DXY is. We'll take a look at how it works and how tracking this single number can not only protect your portfolio, but you can also use it to make money. But right, so let's begin here by answering the very key question. What is the US dollar index, or for short, DXY? Well, in simple terms, the DXY measures the strength of the US dollar, and it measures this against a basket of 6 major currencies. And we are very soon going to take a look at exactly what currencies and why this is important. But here, this index was created in 1973 and is now maintained by the ICE, or Intercontinental Exchange. And here, if the DXY is equal to 100, the dollar is the same value as in 1973. So above 100, the dollar is stronger compared to back then, and below 100, the dollar is weaker compared to back then. But alright, so now, which currencies are in the DXY index? Well, the first and by far the biggest currency is the euro. And the euro is actually consists of around 57% of the whole basket. So if this right here is the basket of currencies, the euro takes up more than half of the whole basket. The next largest currency is the Japanese yen, or JPY, coming in at around 13.6%. Then we have the British pound, the Canadian dollar, and we also have right here, we have the Swedish krona. This right here is my currency. If you didn't know, I'm from Sweden. So I'm really proud that we're coming in here at a solid 5th place. Not at all bad. And here at the 6th place, we have the Swiss franc. But right, so now then, how does the DXY work? Well, the DXY is basically a weighted average of USD versus the 6 currencies we just talked about. So in other words, DXY goes up when USD strengthens and down when it weakens. So when DXY pumps, that means strong US dollar. When DXY dumps, that means a weaker US dollar. But right, so now, and this is very important, what are the factors that move the US dollar or move the DXY? Well, some of the major factors that move the DXY includes interest rates. And here we are specifically talking about interest rates from the Federal Reserve, because of course the Fed, if you didn't know, is the central bank of the US. So the decisions of the US central bank will of course have the most impact on the US dollar. Another thing that can greatly impact the US dollar is of course economic data, so things like GDP, jobs, inflation, and so on and so on. Another very important thing here is global risk sentiment. So historically, when we have uncertain times in the financial markets, many people tend to actually flee into the US dollar, because the US dollar have for a long time been considered a very safe currency. However, one thing about the sort of recent stock market crash that has been, having many investors and traders quite, afraid, is that the US dollar has actually been falling at the same time as the stock market. And that is actually a sign that people are losing a bit of trust in the US dollar. And here, yet another, this is very, very important and super, relevant to today, and that is geopolitical events. So things like conflicts and trade issues can affect the US dollar. And as you guys know, right now we are pretty much in the middle of a trade war that Donald Trump basically started on the whole world. He basically put tariffs on pretty much every country, especially China. And by the way, guys, if you don't know what a tariff is, I highly recommend to check out this video right here. In that video, I go over exactly what a tariff is, how it works, and that video is super relevant for today. So if you have some time extra today, I highly recommend to check that video out. But right, so now let's take a look at how traders use the DXY to make money. And the first method you can definitely use is something called technical analysis. And if you have been following our channel for a while, you know that we have tons of technical analysis content right here on YouTube. Some things you can use includes, trends, support and resistance, the RSI indicator, and patterns like chart patterns and candlestick patterns. And if you want to learn more about technical analysis, I have long courses on pretty much all of these concepts. I highly recommend to check out this playlist right here. I will make sure to link the playlist both in the video card as well as the description below. But here, and this is very key, you can also use fundamental analysis or fundamental strategies to trade the DXY. So you can, for example, do things like following interest rate expectations. So higher rates tend to mean a stronger USD. You can also monitor things like macro data, CPI, jobs, GDP, and so on and so on. And another thing you can do if you are good at it is to sort of analyze and pay attention to different kinds of global risks. For example, our current climate gives traders lots of opportunities in trading the DXY. All right, so here is a sort of DXY correlation strategy. So what happens if DXY rises? So for example, if DXY rises, the natural consequence is that euro measured in US dollar and the British pound measure in US dollar tend to drop, because when USD is stronger, or when the general USD is stronger, these currencies tend to perform well against that. Another thing that tends to happen if DXY rises is that gold and oil prices tend to drop. This is not always true, but in general. So for example, recently the DXY has been falling, right? But the gold prices have been going up. So that is the opposite. Another thing that usually correlates is that when DXY rises, the S&P 500, or that is basically the world's largest stock market index. And by the way, guys, if you want to learn more about the S&P 500, Nasdaq, and the most important stock market indices, I do have a video about that, and I will make sure to link the video both in the video card as well as in the description. But what tends to happen if DXY rises is that S&P 500 tends to dip. But this has not been true recently, and that is very important. But right, so now I do want to jump into TradingView, and let's take a look at how to find the DXY in TradingView, and also, some different kinds of trends to pay attention to. And by the way, guys, if you for some reason haven't gotten started with TradingView yet, I do have a special TradingView link. You can use that link to get $15 bonus and try out TradingView Premium for free for 30 days. So guys, make sure to check that link out if you don't have TradingView yet. But now, in order to find the DXY in TradingView, you want to go up here to where it says symbol search. And then you can simply go to all here and search for DXY. And you want to open, you see that we have multiple different ones, but you can just open this one on the TVC. So you open the DXY right here, and then this chart should appear. And as I said, the first thing we can notice here is that, since the high we printed here in the beginning of the year, the DXY has completely, basically collapsed down around 10%. And what we also can do here, if we scroll back to the COVID crash, I think this was the COVID crash, right, in March 2020, what we can do is that we can actually compare the DXY with the stock market. We can, for example, compare it with the SPX. This right here is an S&P 500 ETF. And an ETF is basically an exchange traded fund. Very important to know about. And I do have a video about ETFs if you want to learn about how they work and how you can start trading and investing in them today. But let's open the SPX. And what you can see right here is that during the crash, right? During the COVID crash, you can see this right here was the COVID crash. We can actually see that way before the price reversed right here, you can see that investors started to buying dollars. You can see investors started to, get very, very scared and sort of buy dollars. Many traders and investors see the dollars as a safe haven when the market crashes. So this is just one thing you can do in TradingView. You can look at different kinds of correlations. How is the DXY moving compared to the stock market? And you can see if you can use any of these trends and correlations to potentially make money. But alright guys, now when you know about the DXY, I highly recommend to check out this video about tariffs. Because if you can understand how the tariffs affect the DXY, you will be further along than 99% of people.